Okay, recording this video on Sunday, the 15th of March 2020. It's just gone 1:31 p.m. Chicago time. Do hope you are doing well. Hope you're taking advantage of these amazing day trading opportunities we're getting with huge intraday ranges. So it's official, the world has gone batshit crazy, and I have no idea whether it's justified or not. And I don't think we'll know the answer to that for a very long time. But in the meantime, we're trying to hunt this kind of little low in the markets from which we're going to get a bounce. Last week's video was all about, we've gone into a correction, more than a 10% down move in the indices. Were we going to go into a crash, which is minus down 20%? On the indices. We got the answer to that this week, where we did fall below that 20% down move, and we reached on this little indicator here that I have 26.9% down on the S&P 500 index. I think it was even more than that because the E-mini reached this 2400 number in the overnight session. And I was looking at that when that 2400 number kind of printed, and I was looking at that and thinking, should I just buy a couple of contracts down here, because this just looks so oversold right now? And that's the question I'm trying to answer. I didn't, by the way, but this week, Thursday and Friday, closed out all of my shorts. I was short Aussie dollar, short wheat, short copper, closed all of those out on Thursday and on Friday, and very happy with those moves. But for the time being, I'm trying to look for this little bounce that we're due to have. Now, we've gone into a crash, down 20%. Is this going to be a bear market or not? And that's decided by whether we break to new highs or not. So a bear market would be we can test back up into the 3,400 level, however much we reach back, we reach a high, and then we turn down again and we go through the lows. So that'll be a bear market, but that's a question to be answered in the days and weeks to come. For the time being, we're oversold, we're due for a bounce. So are we going to get that? Remember, the pros are always playing the psychology against the psychology of the amateurs, and they love doing this on Fridays and into weekends, because the weekends is when the amateur traders are checking their charts, deciding what to do. And the last time we had a little bit of a bounce on the Friday, we kind of reached a little bit of a low at 2,900 on that Friday. We had a very strong Friday, and then it followed through with Monday, and that was all the amateurs buying into that was an oversold level, time to buy. They bought on the Monday, forced the market up. The professionals kind of step in again at this 3,100, kind of force it down again. Now, same pattern again on Thursday. We had a massive down day, minus 9.5 or whatever it was on the index, down, 9.5. And then Friday we reversed back into a big plus 9.3% on the way back up again. So on the weekend, the amateurs are thinking, ooh, that's it. That's the bottom down there. I'll jump in now. So they're going to be playing against, the pros are going to be playing against that kind of amateur activity, which is kind of normal in these kind of circumstances. The question is, was that it at 2,400 or not? And I'm going to show you a couple of charts with what I think is going to happen. But before doing that, we have to get to an incredibly boring and esoteric subject of continuous contracts and how they are constructed in TradeStation, because on Thursday we had rollover in the E-mini market, where we rolled from the March to the June contract. Now, and I have to talk about what TradeStation does with its charting, because I'm a huge fan of these continuous contracts. So in TradeStation, if you use TradeStation, it's at ES, gives you a continuous contract. It's adjusted for price, and it concatenates, joins all of the futures contracts kind of together. So you've got this really great kind of history of what's going on. But I think TradeStation are doing us a disservice by not rolling the data over on the correct day, and this is what we see. So on rollover days, they are showing the new contracts. This is Thursday was the rollover day, and they are showing the June contract on rollover day, which is why the volume was way down. You think, well, that's kind of weird. Why was the volume down on such a huge day as that? Something must be off. Well, there is something off. TradeStation has been rolling to the June contract on that rollover day instead of maintaining the data for the March contract and rolling the following day to the June contract. And for, God knows how many years I've been using TradeStation, certainly over a decade, and I didn't even know this was available to us. Possibly it's a new kind of thing. So anyway, I was hunting around the forums to try and find a way of easily recreating the contracts to roll on the following day instead of the Thursday and roll on the Friday. And I found these little variations of @ES in TradeStation. So if you put in @ES equals 107XC, yeah, very logical, but what that means is the C is for continuous, so it adjusts for the price data. And then the 7 means that it's rolling on the 7 days before expiration. You'll see that the data matches exactly between these two charts. So that's rolling 7 days prior to expiration. If you put in instead @ES equals 106XC, that means you are rolling on the 6th day before expiration and not on the 7th day. And here, magically, what you'll see is on that Thursday, on the rollover day, we have a proper volume reading. Now, this is only of importance to kind of Emini-Watch better indicator users using things like the Better Pro-Am, Better Momentum. With this volume data being out, it'll screw up all of the Better Momentum readings. The calculations aren't accurate, and Better Pro-Am won't accurately measure professional and amateur activity. However, with this little adjustment, we'll get a lot closer to what was actually happening. So that's the little discussion over with this kind of continuous contract adjustment, but I'll show you what difference it makes on my charts. Let's talk about where the bottom is. Okay, usual chart set up on the right-hand side, everything to do with price and better sine waves. So below the price bars, we have the cycles being measured in the 3 different time frames. The highest time frame is boldest, the lowest time frame is thinnest. And then we got our support resistance lines printed on the price bars themselves. Left-hand side, everything to do with volume. First of all, we got Better Momentum, measuring the buying and selling volume. And then on the price bars themselves, we've got the professional and amateur activity showing. So professional bars are in blue, amateur bars are in yellow. And then we combine the two with the volume and the price signals together with our combined combi version of trend, confirmed trend. Strength and uptrends in red, and weakness and downtrends in kind of white and grey background here. Anyway, so once we slice through support here on the lowest time frame on the daily chart, the E-mini, this is overnight session as well. Once we've done that, we are likely to be caught by the next highest time frame. So on the intermediate time frame, we're looking for a support level to kind of come in here, and you can see our intermediate lines, the fast and slow cycle lines, are starting to come together. So that will start to quickly kind of come together, which means we're hunting for that cyclical low. Bottoms are made quickly, and so this could be a spike low from which we reverse very quickly. And whether that was it on Thursday into Friday, I don't think so, but that's because the timing of this hasn't quite come together. You can look at some of your other charts. For example, on the Russell chart, I think these lines have actually crossed. And so that low is being marked either now or very soon on the Russell chart. But the Dow, the E-mini, the S&P 500, the Nasdaq, and so on, showing slightly different timings in terms of that cross, but they're all coming together for that. So very important this kind of week with what kind of goes on. We've got our exhaustion sell on the way down here. We need to be caught by that next highest time frame support when that comes in. And the way I kind of hunt for that is to go down my time frames and look for where that might happen. So on the 135-minute chart, the next time frame down, you can see we're in a downtrend, confirmed downtrend, and so on. We're below support on the lowest time frame, on the intermediate time frame, kind of down here. And so we have to go find another support level, has to kind of come in. We've got the highest time frame on the 135-minute chart, so that's on the daily time frame kind of coming together. here. So sorry, that's the 3-day time frame kind of coming together here. So we're looking for that support to come in at that time frame, but we need another support to come in on one of these time frames. And as yet, we've still got to go resistance to support on each of these intermediate and lowest time frames. So it's not there yet on the 135-minute chart. On the 45-minute chart, again, kind of going down a time frame, you can see we're through support in the highest time frame here. We're through support on the lowest and the intermediate. So we're below all 3 time frames here. Yes, we made a little pullback to end of trend on the lowest time frame on the 45-minute chart, but we have to go make another one of those or another pullback to end of trend on the 45-minute chart and so on. So we're having a bounce right now, which will bounce us into that kind of resistance area where we'll have another kind of push down. And where that push down goes, who knows? Does it go into, do we come so far up here that the push down is only back to 26, 27? Or does the retrace only go to a weak move and then the push down finally goes into below the to retest the 2400 level? I certainly think the 2400 level is really important. But you can see on the lowest time frame here, we're coming back up to have a cross there, which will be another pullback to end of trend. And on the way down here, we've got a little Rambo signal here, and we're kind of fluffing around the 0 line on better momentum. And this is where I start saying, well, I'm wary of the better momentum and better pro-am calculations here, because that was all happening during the rollover day, and this is where the volume is kind of off on TradeStation during those days. So what I'm going to do is I'm just going to add that little extra bit of text, 106 XC, and we'll load that data and show you what it looks like on the chart. So here we go, the Rambo signal has disappeared, and our volume kind of looks, unhealthy, but it's not kind of extreme sell-off and so on. And I've been saying I'm looking for that extreme kind of sell-off here to mirror the exhaustion buy that we had at the highs. We need something to mirror that, an exhaustion sell to kind of come. So even on the 45-minute chart here, we have not gone into those pullback to end of trends, final test down of those lows. So I still think we could easily have a little bit of a bounce, early this week because of the, weekend amateur activity, and then have a push down during the week where the professionals, get everybody into that exhaustion capitulation type move. So let's go down finally to the 15-minute chart. This is about as low as we can go to look at minute charts that make any sense in terms of trend. Used to look at the 4500 tip bar chart and kind of look at that for trending moves, but we've got so much activity kind of going through. It's literally 5 times the normal number of ticks kind of going through. The 4500 tip bar charts become like an intraday chart rather than a swing trading type chart. But anyway, so on the 15-minute chart, let me just show you this again. So a whole bunch of amateur bars here, and that's all showing up because of the volume calculations in this continuous contract. So let's make the same adjustment again, equals 106 XC, data loaded. Why hasn't it done that on this chart? They're not linked. Anyway, doesn't matter, because the price information is the same. It's the volume information I'm worried about. So here we go. We can see here that we had some blue professional bars kind of stepping in on those Wednesday, Thursday activity, and then some amateur bars testing a little bit, and then we got a ramp from there. But what I've been talking about is I want to see exhaustion sell to mirror into the highs. We had exhaustion buys. I want to see some kind of intraday, exhaustion sell to mirror those. And all we've had is kind of flush patterns going on here. Yes, it's definitely very weak at this point, better momentum. We had some pretty decent reads, but nothing to mirror these type of reads. So the scenario I'm looking at is that we're going to have some kind of rally back to put in those pullback to end of trend moves, and then have this final kind of capitulation move to get those exhaustion sell signals, because in my mind we still haven't had them on the 15-minute chart. And I've been saying for a couple of weeks now, That's what I've been looking for in order to end this move on the way down. On the price bars on the 15-minute chart, yep, we put in some pullback to end of trends on the lowest time frame, but it's still weak. We haven't broken into an uptrend. But on this chart, what I'm looking for is us to come back up, cross on the intermediate time frame, which will give us a pullback level, and we'll go pullback end of trend on that intermediate time frame, which is a 45-minute chart. So 3 times 15 on the intermediate there. So if that kind of makes sense, roughly speaking, it says, haven't seen the exhaustion sell on the downside. We're having a little bit of a relief rally that I think is just the professionals playing the amateurs over the weekend, and that we'll have a nasty kind of capitulation down type move where we'll get those exhaustion sell moves. Sundays evenings activity is always important. Whether that kind of continues to rally, suck people in on the Monday morning, the amateurs in, and then at some point during the first part of the week, we'll have that kind of move down, that flush down, capitulate, test 2400 again, and we see where we go from there. So that's my E-mini kind of charts, just a quick one there. The other video I put out on the Sunday, I think possibly, which was a Bitcoin chart, which was talking about look for a particular resistance to be broken for us to potentially break into a bottom being made in Bitcoin and a rally to start from there. The level I was talking about was 8,002. Did not get broken because I was talking about it kind of here where we had a little bit of strength. We need to see that continue and 8,002 be broken to the upside. And what we got instead was a massive collapse in Bitcoin, kind of down to 3.8, kind of down here. And we've had a similar pattern kind of come in. So at this point here, we had exhaustion sell, bullish divergence. I said this one was right on the 0 line. Would usually like to see a flush signal after that. There's the flush. It came in, and we did not get a bounce from there. We didn't break into an uptrend. We didn't break the 8,002. We've come back down. And so we're coming down to lower and lower levels, kind of finding more and more support. So obviously here the blue professional bars falling through the ice at 8,000, bang here, but then coming into 5 and 4,000, the blue professional bars stepping in. We've had exhaustion, so bullish divergence kind of come in, and we're basing again trying to find a level to break up for. Now at this point down here, about 5,009 becomes the number that we need to break through and add in order to get a confirmed kind of change in trend and a break back up into an uptrend in Bitcoin. And this is why I'm calling these kind of levels. So as we come down through support on the highest time frame, we start to have a little bit of strength kind of come in. Well, those levels, when that strength kind of comes in, it needs to be confirmed on the upside. That's the initial strength, and then we need to break through the upside. That's why the 8,002 level was important here. We've now had a little bit of strength kind of come in. This is why this 5,009 level is kind of critical. It's kind of around the highs of this kind of little bit of strength that we're having. We need a confirmed break. So getting back through resistance on this time frame, on the intermediate time frame, back through the highs of that little high of that little bit of strength, that's where we get a confirmed uptrend and things will break kind of solidly. But then at some point, because we're so far through our support on the highest time frame, we're going to find resistance on that highest time frame will come in on this 5,000 tip bar chart. So we didn't get confirmed break at this point, so we've had to remake the pattern all over again. We're looking for this strength, and we're looking for that kind of level 5.9 to be tagged on the upside and break back up into a bit of a rally there. So there we go. It's the two kind of things I'm going to be looking at over my charts in the next couple of days. I've actually got a long dollar position right now. So starting to hunt out those other reversal positions in the other kind of asset markets as well. At some point we need to talk about gold and silver, and also hunting for that kind of high in the bond market. Anyway, so that's what I'm seeing on my charts this weekend, and looking forward to Monday's trade.